Hi champs, welcome back to my YouTube channel. Thanks again for the growing subscriber base, I really appreciate that. If you haven't subscribed, please consider doing so that you can get, notifications as well as, more information as I upload more videos onto the platform. If I grow, we grow, right? Let's get those numbers up. So today I'm going to be tackling something that I've been asked about a lot, especially on TikTok. I'm under TikTok under the same name, right? So Quantum SA, so give me a follow there. So basically the question is around moving your finance. It can be a bond finance or it can be a car finance. A lot of people that have these products don't know that you can actually move them from bank A to bank B, bank B to bank C, bank C back to bank A. So it's going to be a nice short video about I made notes, the why you would move your products, the how you would move the products, and the costs that are involved, right? So I've done this. I've moved my car from Nedbank MFC to Westbank, right? And so can be done. I've also moved my home loan from Nedbank to FNB/RMB, so that's also highly possible. So now I'm going to tell you just general terms, why people consider doing that, how they go about it, and the costs involved. Okay, so the why is definitely pricing, right? So most people would shop around every couple of years. They would, go to Bank A and say, look, can we look at my rate? Bank A can be like yes or no. But if they say no, then you can go to Bank B. Bank B gives you an offer. Then on your existing home loan, right? Then you go back to Bank A, and then you're like, look, can you match this or can you do better? Because otherwise I'm going to leave. It's as simple as that. So a lot of the times, what that involves is you have to have good understanding of your current credit agreement. So you have to know where you are relative to prime. Are you priced at prime plus 1, prime plus 2, prime plus 3? Because you can't go to Bank A and say, hey, can you give me a better rate if you don't fully understand your current interest rate. So that's very important. Do you understand your monthly statement? Do you understand how much you're currently being charged? You can't understand what a better rate is if you don't understand where you're currently priced, right? So that's very important. Another reason why people move is they get bundle offers, right? So if you've had a car and now you're getting an apartment, so your car was with Nedbank and then you get an apartment, but then FNB gives you a better interest rate than Nedbank. Then you can bring up to FNB that, look, if because FNB is in the same group as Westbank, then you can say, look, if I bring over my car to Westbank as well, can I get a better rate on my home loan, right? So there's the bundle aspect of things. Or if they don't say it, or if you don't say it, then they can suggest it. There's a benefit called main bank benefit as well, right? Which also causes people to move. So it's especially for home loans. If you move your home loan to a bank, they will say, look, we'll give you, let's say, 12%. But if you move your current account as well, so if your salary lands in this bank account within our bank, then we'll give you 0.25 percentage lower. So it'll go from 12 to 11.75. So that's the main bank offer. So like I said, you get the bundle. So if you get another product and then the bank is like, look, bring everything over. So there's the benefit, and then that's the reason why some people move. Or if you shop around and then you just get a better offer. So that's the why. I'm going to move on from that. There's the how. So home loans are like 20-year obligations, right? And most often than not, once you have a home loan with one bank, you tend to keep most of your products with that bank, right? But if you're in investment property, then you might want to play around and leverage your risk off of different, banking platforms. Because Bank One might be like, look, Tando, I can lend $1 million, but 2 million is a bit too rich for a single individual. But Bank One will be like, okay, Tando already has $1 million at Bank One, but I can also give her $1 million because I'm only risking $1 million, not 2 million. Whereas Bank A would be risking 2 million if they gave me another loan, right? So, but most people tend to like to keep their stuff in one finance house. So what the banks tend to do is every couple of months they will run a promotion. So what they'll do feeds into number 3, which is the cost aspect of it. So the promotion can be, look, you can do a bond switch and we're not going to pay any costs. Do you understand? We will cover the cost. That's what the bank is saying. We'll cover all of the costs. Just come over. What they actually want is your whole portfolio. So it'll start off with a home loan, and then a year or 2 or 3 years from now, you'll want to upgrade your car, and they already have the MFC or the ABSA finance or the Standard Bank finance. So their thinking is they're playing the long game, which is Tando can bring her home loan, but then we know she's going to want to buy this and this and this and this and this going forward, and that's all going to stay within the group, right? So just be on the lookout for those promotions. If there isn't a promotion, then what tends to happen is that there are cancellation costs. So you're cancelling the bond with Nedbank to move it to Standard Bank. So you have to pay a cancellation cost with Standard Bank. And if you know if the new finance house isn't going to cover that, then that falls on you. So there's a lot of T's and C's. You genuinely have to apply yourself, and you have to read through the finance agreement. You have to have an understanding of what they're saying they're going to pay for and what they're not going to pay for. What's also important is that your credit agreement with Standard Bank can be different to your credit agreement with ABSA. So if your credit agreement with Standard Bank was a 20-year home loan, you can go to ABSA and say, look, I want a 10-year home loan now, especially if you've already eaten away at your home loan. So a lot of people think you can't refinance if you're in the middle because it's going to set you back. No. You can get a 20-year home loan, right, with ABSA. Then go to Standard Bank at maybe year 12 and be like, look, I'm already 8 years into my term. Give me a quote for a 10-year home loan, right? Because you're already at year 12, you don't want to start at 20 again. So that's something that's very important. You understand? When you're renegotiating a new contract, it's brand new. There's no saying that, look, you have to start at 20 again. Do you understand what I mean? So that's something that's very important. I've had a lot of questions about it. I thought I should address it here. So yeah, just be on the lookout for those banking promotions. If there isn't a promotion, still go on the site for ABSA, FNB, Nedbank, Standard Bank, fill in the form that says bond switch, have the consultant call you, have them tell you what's happening. Do you understand what I mean? And obviously once you get to signing and stuff, have everything on email. Do you understand what I mean? Have everything on record, what they said they're going to cover, what they said they aren't going to cover, and just read through that information. Unfortunately, it's not the kind of thing where I can say this is what Standard Bank is saying, this is what FNB is saying. It differs, right? So I know when I switched my bond from Nedbank to FNB/RMB, the agreement in place was that FNB would cover everything, right? The only cost, and now we're moving to point 3, the costs. How much, right? How much is this going to shire me? The only costs that FNB said they're not going to cover is the the bond initiation cost. So that's the 6,000, right? For your vehicle, it's the 1,200 rand for a new finance agreement. So I initiated my bond with Nedbank, I paid that 6,000. When I brought it over to RMB Home Loans, I still had to pay that 6,000, right? But what's important to note is if your bond is registered for 500,000, right? If my bond was registered for 500,000 for Nedbank, when I move it to FNB, if I register it for 600,000, I am going to be liable for that extra 100,000 more. Do you understand what I mean? Because with Nedbank, it was 500,000, and now I'm saying FNB, I want my bond to be 600,000 now. I want that 100,000 excess. Do you understand? Maybe I want to take it out, I want to extend, I want to buy furniture, whatever the case. FNB is going to cover everything 500,000 down in terms of the costs, and then the extra 100,000 cost-wise, I am going to have to pay. So that's something you have to be cognizant of, right? That also falls into the promotion point, which is the number 2, which is the how, right? So the banks will tell you will cover costs up to the amount of the initial home loan, right? So that's what I'm basically talking about. I'll just repeat that example. My home loan, Nedbank, 500,000. Home loan, FNB, 600,000. FNB costs only up until 500,000. The registration costs that are above 500,000, which is the 5 to 600,000, I have to cover out of pocket, right? So that's something to be cognizant of. And then the vehicle finance switch was actually even simpler and quicker. You just go to Westbank, you're like, look, I want to move my car from MFC to this, can you give me a quote? They give you a quote. If it's favorable, so if it's lower than MFC, then you're like, okay, cool, let's do it. It's simple, it's quick and easy. Your native obviously changes the finance agreement, but you understand what I mean? There's nothing above and beyond that, especially if it's a new vehicle and it was registered you initially. It's literally just a change of finance, and then they will add that 1,200 to your new statement, right? They will capitalize that. So I don't have a balloon payment. I'm not sure how that would work and all of that. But if you just straight financing, it's that simple. With the home loan, what you have to do to avoid cancellation costs is you go to Nedbank and you're like, look, I need to cancel my bond, right? You cancel that bond and then you give them 90 days. When you move to Standard Bank or ABSA or FNB, you no longer have to pay anything to Nedbank, right? The only thing that you're going to be paying between you and the bank, depending on number 2, which is the how, which is their promotions, what costs they cover, then the registration costs are all that you're going to pay. But cancellation-wise, you just don't be in a rush, right? Give them notice in writing, look, I'm cancelling my bond. Then you can chat to your original, to your new financier or new bank about timelines and about what they're going to cover and about what the new finance agreement is going to look like. Okay, so at the top again, you've got the why. Why do people switch? Better options. You've got a bundle offer. Do you understand what I mean? The other bank is basically offering you a bit better. 2, the how. You have to reckon, you have to shop around, look at the different banking platforms, go to ABSA Home Loans, go to FNB Home Loans online and see what they're offering with their bond finance. 3, the costs. What are they covering? What are they not covering? And more importantly, the cancellation costs with your existing banking bond holder. Banking lender, right? Your bond holder, your current bank for your bond. You have to do a formal cancellation, and then after 90 days, they're not going to make you pay anything, right? You've cancelled, you've given them notice, basically. Do you understand what I mean? So that you can move your bond over. 3 very important things, but what I want to stress is that it is possible. You just have to do the paperwork, and you have to read. Let me know if you're in the process of moving your bond. Let me know why. Let me know how. Let me know what it's costing you in the comments below. Share this. Subscribe, like, and all of those cute things. But yeah, let's keep informed. Let's learn about these things and let's shop around. Let's see where we can get the better deal for things, right? These are big ticket items. You've got 5-year, 6-year loans for vehicle finance, and 20-year home loans and 10-year home loans. So let's get the best deal. You know, let's see where we can get value for money. All right. This is Quantum SA. I'm out.